Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. What we're trying to do here is get you what you need to know before you go, and that starts off with talking about the economic data, see how that impacts the overall markets with some market analysis, and then wrap it up with some option strategies we can talk about to implement into our portfolios. So before you go, smash that like button for me and subscribe. Right down next to it is a little bell. Make sure you hit that too, because that will help you when I get unannounced, give you a notification. All right. So without further ado, let's get on with the economic data, see what's going on in the overall markets. Well, yesterday we had a couple of economic data points that I told you to keep your eyes out for. The NFIB, which is National Federation of Independent Businesses. It's a small business index, great gauge to determine what's going on in our local communities, because as I've talked about with the price of gasoline here, pull up gasoline, well, as crude oil moves higher, gasoline moves higher, that slows down velocity of money. These small businesses are going to be the first ones affected by that, because that's where we would spend that ancillary money. Think about it, about a year ago now, we were at $2.50 a gallon, maybe let's call it $3. Now we're at $4.50 basically a gallon. And what does that do? Well, that's $1.50 on 15 gallons. That tells you it's $30, right? $30 out of a tank of gas from every individual out there. That money is not being spent in the economy, folks, and that will slow. So with the tip business optimism, that starting to wane as well. We saw that come out. That is overall business optimism, gauging whether or not they think the future outlook is looking good. Well, anything above 50, just like our rest of most of our numbers there, is expansion. Anything below 50 is pessimism. So optimism, pessimism. We come in at 41. That's the lowest reading, folks, that we've seen since, I believe it was right around 2013. So businesses are not liking this kind of environment. Why? Because they know almost immediately when they see these crude oil prices go up, one, that prices of their goods is going up. Two, their consumer isn't going to be able to afford their products either. So those are two counterposing headwinds that these folks are going to be up against there. And then today we really don't have a whole lot other than job openings. JOLTS job openings too, and crude oil inventories. That's going to be very important. Remember, last week we saw a major drawdown of about 5 million barrels. So going forward, keep your eyes out there for that. I think you're going to continue to see a lack of supply with Russia basically get embargoed. They're not going to be able to sell theirs on the open market anyway. It'll probably go mostly to China or somewhere else in the black market. But having said that, that's still going to drive prices higher, especially because we're seeing our administration not back opening up this fracking. There's 6+ different companies looking to open up new fracking operations, and that's not being allowed, which is a little bit crazy right now. So that I would say, for the most part, we've got risk totally to the upside in crude oil. Gold futures making a bit of a pullback here, but it's not going to be based on anything other than folks covering on this massive move to the upside. These folks that were getting in at 18 are looking at 2,000 and cannot wait to cover that trade, I'm sure. The folks that are on their heels are probably really scrambling. That's why we got that blast off to the ultimate highs here of 2,078 there. Call it 2,079. Now, are we seeing sector rotation? I don't really think that's what we're seeing here in Bitcoin. I just think folks are really starting to look at Bitcoin at these levels and say, hey, this has been a massive pullback. There has to be some value here. Folks, I've talked to you about it as well. That 38,000 was around that area that I think that the buying was going to come in very strong. Those folks haven't seen that price in a very long time. They really want to get that in their portfolio if they missed it the first time. So that's why we're seeing a bit of a rebound here in Bitcoin. It's also starting to make some moves in the mainstream media, which is going to also drive that price as well. Because remember, we talked about it's fallen off of the search list. That is going to be a lack of demand there for that product. Now, bonds finally coming back out of that 160 handle. I talked about that. That was a little ridiculous to the upside. I don't know that we're necessarily going to see the interest rates get lowered or even stay the same. I do believe that we're going to start to see some interest rates moving higher, although the Fed at this point is really stuck between a rock and a hard place on raising interest rates, folks, because they have two kind of mandates here. We've got the employment picture looking pretty good. Inflation starting to move a little bit higher, but we are worried about things like crude oil. Last time we saw crude oil at these levels, it put us into a recession. I just talked about how the velocity of money gets sucked up just by one product. And that also exacerbates those problems, leading to a recession. All right. So make sure before you go, smash that like button, folks. Bonds pulling right back down to the point of control. Really not a whole lot to see there. The only thing to see there is that bonds price is going to go down in value, talking about higher interest rates there. Levers and pulleys. Soybeans, just back to this because I don't know why, to be honest. It just happened to pop up here. So let's take a look at wheat and just see what's going on there. Look at that wheat. Just continues to move to the upside, almost trading $14 a bushel there in wheat. Bread prices could start to see some upward momentum there as well. VIX starting to come off because we're seeing a little bit of a bounce here in the equities. Now, I've talked about this time and time again. We've been seeing some real weakness in this. Risk is still to the downside, despite the fact that we've got an upside day here. We really have to break this downward momentum and break the newer highs to get out of this downward pattern here. And it just does not seem like we have any legs to do that at this point. Again, Dow Jones Industrial Average, all these charts look very similar because markets are trying to find value at these levels, or at least participants are trying to find value at these levels, and it's getting a little bit of a bounce here. Still risk to the downside at this point. Now let's get on to a couple of breakdown. Wild day yesterday, right? I mean, blasting off to the upside, noon sell off. That I think we're going to continue to see that kind of volatility as folks are trying to rotate in their portfolio, albeit I think it's a little bit late. All right, ConocoPhillips, we talked about this. I've been long this trade since basically October. We had done a poor man's covered call in a sense, but we stretched it out a little bit. I talk about those levers and pulleys on that. It ends up being more of a risk reversal to the upside, a bullish risk reversal here, because I didn't pick the same strikes. And I talked about why I wanted to do it that way. And getting long the 80 strike, getting long or short the, I think it was the long the 80 calls and short, I think it was the 75 puts in there, and basically gets my break even in and around 85 because I'm long the 85 calls. I paid about $5 and some odd cents for this strategy, this long bullish strategy. Well, it didn't really work out back there in November, you can see, but I did stay long with the calls and got long the stock as a result of that. Been lowering overall cost basis on it. And today, or actually yesterday, sorry, when we were talking about this, I was looking to sell some covered calls. And I talked about this, that I was going in to sell those covered calls because we had extremely high volatility in the markets. There's no real earnings to drive that. So feeling like feeling like the market is a little bit overdone to the upside with that high volatility, that's the time to take advantage of it. And I went into the April and sold the 120 calls in there for $1.35. I tried to get in there close to that offer. I talked about yesterday, markets were looking a little bit bullish there. That was the time to look to start to sell some calls, I believe. You get these massive pullback days. Those are the days to start selling some puts because you get the snapback, a little volatility crush, and then your trade is golden. These trades are already starting to look pretty good, and they haven't really moved much from yesterday. I sold them at 135. Last print was 90 on those. I think it settled around 92. Las Vegas Sands, very similar. Sold some April 45 calls in there for 82 cents. And remember, we talked about that. It was trading around 60. I put it in about 20 cents higher because of that delta. We were looking at $1 higher. I added that delta into the premiums, and that's exactly where I got my strike filled. So that's why we talk about these levers and pulleys in the option montage, folks. Cracking the code. Check that video out. Go to Pro Trader Strategies. Subscribe. Make sure you hit the bell right next to it because that's what gives you the unannounced videos. Like this one, yeah, I was scheduled for 11, but I usually pop in and announce when I start feeling like I want to talk about something. So make sure you guys have that lit up as well. And that's all I got for you folks. Tomorrow's video, cracking the code. Check that out. If you can't take that, hit the bottom. Take it easy. Don't forget to hit that thumbs up. Bye for now.